Good morning, everyone. Welcome to the Buying a Home in the Netherlands webinar. Well, who am I? My name is Ludo. I'm an expat buying manager at Expat Housing Network. I am the expert for the Amsterdam area, the greater Amsterdam area. I call it in the sense that I'm also responsible for Almere, Zaandam, Haarlem, Amstelveen, anything really in the proximity of Amsterdam. Well, I am from the Netherlands, but I've lived in the US for a couple of years as an expat myself. So I know what it's like to move to a different country, well, find out what it's like to live there, etc., etc. I'm a proud dad, not of kids yet, but I am a proud dad of 2 cats. If you guys are lucky, they might jump in front of the screen as they are big attention seekers. I live in a new build currently in the north of Amsterdam, but I've lived in, well, property from around the 80s in Amsterdam East, and I've lived in a very old property in the city center of Amsterdam. So in regards to Amsterdam, I've seen pretty much all of it. All right, well, we believe that greatness is achieved in the agency of others. So what do I mean with that? Is that I'm not doing this by myself, obviously. We have a wonderful team at EHN that is responsible for the buying side. We have Giovanna. Giovanna is with us today. Would you like to introduce yourself, maybe, Giovanna?
Sure. Good morning. And I'm very happy that you have the sun over there, because here in Eindhoven we only have the clouds today. A bit chilly, actually. Good morning, everyone. I'm Giovanna. I am from Brazil, been in the Netherlands for almost 15 years. Yeah, and I am the buying manager here in the south area of the Netherlands. So I'll be helping out today, and just helping out my colleague Ludo today. And just so you know, you can pop out your questions at the Q&A during the webinar, and also in the chat. And then in the end, we're going to answer them all, and during the webinar as well. So yeah.
Yeah, so if you have questions, Gio will be the one that is taking care of those. Thank you. All right, so we also have Rafaela, also from Brazil, speaks Portuguese, English, and Spanish, but is getting proficient in Dutch now as well. Ellen lived in the Netherlands, but also, or is from the Netherlands, but lived in Thailand as well. Speaks Dutch, English, and a little bit of Thai, and a little bit of Japanese as well. And then we have Rick, also from the Netherlands, but has lived in Colombia and South Africa for a while. And because of that, not only speaks English and Dutch, but also Spanish. Cool. Well, small introduction on the Expat Housing Network company as a whole. We are no traditional real estate agents. What we mean with that is that we help with specifically buying properties and renting properties. We don't sell and we don't let. So we're really focused on securing a property and making sure that that journey of that process is as smooth as possible. We charge a percentage of the appraisal value, so there's no incentive from our side to have you pay more, as the appraisal value or the market value is something that is determined by a third party, the appraiser. That is it's the most transparent way of doing in our opinion. Well, as you saw in the previous slide, the majority of our colleagues have either lived abroad or are from abroad, so we know what it's like to settle in a new country. Added value of EHN, well, selling agents take offers from EHN a little bit more seriously, in the sense that they know we've done our homework, that we know what an expat might be looking for. So they know once we make an offer that that offer stands and is a strong offer. It's sometimes possible for us to book viewings when it's no longer possible for someone without an agent. A lot of selling agents have specific dates for people with a buying agent. Plus, with our network, a lot of agents are willing to squeeze us in to make sure that our clients are able to view the property. Important one, we support by reviewing the Dutch legal and property documents, in a sense that we make sure that everything that is happening in the process is legal, is up to our expectations, and is up to the norm. But we also make sure that the property documents, and therefore the property itself, are also in a good state. The homeowners association is in a good state, etc., etc. Very important. Same goes for the second one, and that's helping define the market value through market data. We'll touch base on this a little bit later, but very important to know what the market value of the property is. We'll obviously inform you about the rules and regulations during the whole process, and we'll make sure that you guys don't make the same mistakes we made when we were buying our first property. Well, I'm not here just by myself or just with Gio, but we also have our trusted partner from Mr. Mortgage here. Robin, would you like to introduce yourself and the team?
For sure. Good morning, everybody, and thanks for joining. Ludo, as always, thanks for hosting this wonderful webinar. I'm from Mr. Mortgage. I'm the second one from the right, Robin Uijtdehaage. I won't challenge anybody of you to pronounce my last name. It's complicated enough as it is. So we're from Mr. Mortgage, and I'm joined by my wonderful team from Cesar, one of the financial specialists, and Özkan as well. Özkan is kind of our mortgage Google, if you will. He has seen everything and everything, and he collected all the information, and he is kind of a machine where you can just put in a coin and you get all the information that you need. Cesar and I as well, but he is kind of the wizard there. So that's very nice to have. And of course, always joined by our colleague Egle as well when it comes to our marketing. Basically, to get us out there so you can get to know us and we can help you out. Basically, what we do is we guide you from start to finish when it comes to considering buying a home, or at least considering your housing situation. Doesn't also always have to mean that you have to buy a house. We'll first see, okay, what is your financial situation when you consider moving in any way, shape, or form. So first consider what is your situation and what's your goal. Is it the best time to do it now, or does it make more sense to go to do something later? Do you want to rent now, buy later, or buy now? And then what do you want to buy? Because you can check your mortgage capacity anywhere, but does it also actually match your financial situation? So that's also very good to keep in mind. Not only when it comes to buying your first home, but also when you move to the second home, the third, fourth, fifth. It all goes. And even if you want to keep your current property to rent it out, right? So that's a big topic right now as well. All of that also when you would like to increase your mortgage later for renovations or something. Basically anything to do with finances and housing, we're here to guide you through that whole process from start to finish. What I mean by that is when you start considering buying a home until you have the keys in your hand, we'll go through that whole process to make sure that you always are up to date on the interest rates and your financial situation as well. Interest rates, we'll come to talk about that later on as well. They're fluctuating a bit every now and again. Now, we work with basically all banks available in the Netherlands independently, so we don't necessarily care where you secure your mortgage when it comes to the bank, but we are most concerned that you go somewhere that the best option is yours, basically. So that's what we do in a sizable nutshell, and I'm very excited to tell you all about it later on, but I'll pass it back to Ludo for now, and enjoy.
Perfect. Thanks very much for that introduction, Robin. So the goal of today, is to add value to you guys. Some people always think that there's some kind of secret association between agents where we try to keep as much information as possible as a secret. Well, that is luckily not the case, and we definitely believe in sharing all the information freely. That's also why we give this webinar, to make sure that you are as prepared as possible once you're entering the process of purchasing your first home in the Netherlands. Some things that are good to know. Robin, would you like to kick off with the National Mortgage Guarantee?
Of course. And there I am. Yeah, National Mortgage Guarantee. It's an important topic to consider. You see two numbers and two amounts, and also two years there, 2022, 2023. Now, obviously, we're in 2023 right now, so this 405,000 euros is the number. Now, what does it actually mean? NHG, National Mortgage Guarantee, is kind of an insurance arrangement, if you will. I usually call it a kind of a doomsday insurance. What I mean by that is really things have to happen for this insurance to kick in. Basically, how it works is, let me give you an example. You buy a house for 350,000 euros, or 375, let's use that. 375,000 euros. Everything goes well, you have a mortgage, all good, but then disaster strikes, you lose your job. For one of two reasons. One, if the company is not doing so well anymore, they cannot maintain your job financially, and they have to let you go. That's sad enough as it is, of course, but it also leads you to, for instance, not being able to pay your mortgage anymore. Same thing applies as when you're unemployed because of a disability, so you cannot do the job anymore, or you cannot get the same income anymore. Basically, it boils down to the same thing. something happens that makes it so that you cannot afford your mortgage anymore. First off, what NHG will do is they will start negotiations with the bank. They will say, okay, let's see if we can have a payment plan, for instance. If that doesn't work, you have to sell your house. You don't want that, but that's what could happen. So first off, you lose your job, you cannot afford the mortgage anymore, and now you have to sell the house. Now, what I mean by the disaster situation is there if you also, the property value has decreased. Now, first and foremost, this is not the expectation, but just to give you an idea how it works. So let's say you have a mortgage for 375, but the value dropped down to 350. This means that you don't have a job, you don't have sufficient income, you have to sell your house, and you have a remaining debt of 25,000 euros. Now, that's when national mortgage kicks in, national mortgage guarantee kicks in, and they will say, okay, sure, we'll pay this 25,000 euros for you, so you don't have the remaining debt. That's the idea of national mortgage guarantee. Now, they don't do this solely out of the kindness of their hearts. It is a government initiated situation or arrangement here, but they will charge you a one-time fee if 0.6% of the mortgage that you take out. Now, those are the details. Again, I mentioned it's very unlikely that this situation happens. So why is it still interesting? The interest rate is significantly lower. You get about a 0.5% lower interest rate when you have this NHG arrangement in your mortgage, which we can take care of course, no worries, than when you don't have this. But there's a cap, and this is where the 405,000 euros kicks in. What this means is this is the maximum mortgage and purchase value of the property that you can buy. So you can buy a house of a value to a max of 405,000 euros to be able to secure a mortgage with NHG. If you buy a house for 406,000 euros and the value comes back the same as well, then it's not possible to use that at all. Even if you lower your mortgage to 405, still it doesn't work anymore. Anything over a value or purchase price of 405, you can not secure NHG anymore. Because this is a common question that is usually asked, so let me counter that directly. Again, if you buy a house for 410,000 euros and the value comes back at 405, all good. So it's depending on the value or the purchase price, whichever one is lower, that's the amount that NHG will be based on. So that's basically it. So it is a nice benefit, lower interest rate and some security through the insurance situation that it has as well, with a cap of 405. It is determined every end of the year. So end of this year, we'll probably get the number for NHG, and it probably will be around the same or maybe a bit higher. Let's see.
Perfect. Thanks very much. Cool. All right, then another thing that is good to know, and that is regarding the transfer tax. Well, first of all, what is transfer tax? Transfer tax is the tax you pay when ownership from one property is transferred to, from one person is transferred to another person. So let's say you are buying a property, an existing built property, then ownership is transferred from the sellers to a buyer, then you have to pay transfer tax. Well, there are a few rates for the transfer tax. The most well-known is the transfer tax for residential properties. It's the one you see on the left. If you are going to use the property as your long-term own main residence, then the transfer tax is 2% of the purchase price. So this is always very typical because you are going to most likely use the property as your own long-term main residence. Now, you also have a transfer tax for when you are not using the property as your own long-term main residence. In other words, if you're going to use it for an investment or a second property, a vacation home, anything like that, as long as you're not using it as your, again, long-term main residence. And then the transfer tax is significantly higher, 10.4% of the purchase price. So yeah, these are the two common rates. However, luckily there's in the Netherlands a transfer tax exemption. There's a rule where if you meet certain requirements, you don't have to pay any transfer tax. Now there are 3 requirements you need to meet, and you have to meet all of them to be able to make use of the transfer tax exemption. First of all, you have to be a starter, or in other words, under 35 years old. The purchase price of the property should be 440,000 euros or lower, and you can only use this exemption once. So it has to be the first time using the exemption. If you meet all requirements, the transfer tax is 0%. Well, you can imagine that on a purchase price of 440,000 euros, instead of paying 2%, paying 0%, saves you more than 8,000 euros. So that's quite a significant amount. On the bottom right, you see the visit transfer tax checker. When you receive the slides tomorrow, that's actually a button you can press on, and then you can fill in some details about yourself and the property you're looking to buy, and you can check how much transfer tax you would have to pay. A question I get asked a lot is where, for example, you are 34 years old, but your partner is 36. What happens then? Well, as you are both receiving 50% ownership of the property, you as a 34-year-old will be paying 0% over your 50% share, and your partner is paying 2% over his or her 50% share. In other words, together you are paying 1% of the purchase price as transfer tax, if there's an age difference above and under the 35-year-old threshold. Cool. All right. Let's talk about renting versus buying. It might sound a little bit strange that we're going to talk about renting in a webinar that is dedicated about buying, but I think it is good to know what the difference is, what the pros and cons are, etc., etc. So let's start off about renting. Why you should rent. Well, there are a few pros, obviously, to renting a property. First of all, it gives you a lot of flexibility. Typically, you'll have only 1 month's notice, meaning that if your employer says, look, I have another adventure for you, you can move to the other side of the world and work there, well, you can take that opportunity, cancel your rent, and within 1 month you're gone. No obligations anymore in regards to your property. The other way around as well, if you're looking for a new rental property, typically you can find something within 3-4 weeks, and then another week to move into the property, whereas buying a property takes a lot longer. There are almost no taxes or maintenance when renting a property. So why do I say almost? Is because you do have a user tax, which is water usage and garbage disposal tax. But a landlord or owner of a property has a lot more taxes, like property taxes, sewage tax, with different kind of water board taxes as well. Plus, there's almost no maintenance when renting a property. So especially the expensive big things like painting the window frames, the roof, all the internal appliances, that is all for the landlord, and any maintenance or repairs that have to happen on that is not for you as a tenant. There's also no down payment required. There is a deposit required, but that's different than a down payment. A deposit is something you'll most likely get back at the end of the rental period, and therefore just a cost that is parked at the landlord for a period of time, but something you get back. Down payment being an initial cost that you have to make to actually purchase a property or rent a property. In this case, in renting, there's no down payment required. Just the first month's rent, and then you're allowed to get in. These correlate with some cons from owning a home. Obviously, you have taxes, you have maintenance, and it's harder to move. You have to put your property up for sale. You have to do the viewings. It takes a long time. So you're more stuck to your property. Well, that having said, I hope you guys are still interested in buying a home, because there are definitely a lot of cons to owning a property. First of all, stability. In a world where things can get quite uncertain, it's very nice to at least know that your property, your safe space, your home is something that is stable, and something that will not be taken away from you or fooled around with, as long as you keep paying your monthly mortgage payments, of course. Now, these monthly mortgage payments, it's partially, of course, interest, but there's also a big part which is just repayments on your loan. And these repayments, it's a way to build up equity. So you can see it like this: every month you pay off, you put some money in your bricks, and at the end of the term or of your entire mortgage period, you have paid off your entire property. If at that moment you sell your property, all the money that is made from that sale can be put in a new property or in your pocket. So you're really building up equity in that sense. And that, keeping in mind that the market might increase as well, it's a quite stable investment. Now, we also have a scheme in the Netherlands that is called the Mortgage Interest Deduction Scheme. And that is a way where at the end of the year, at the end of the mortgage year, when doing your annual income taxes, you can actually get back around 37% of your paid interest, which is a rather large amount, making it again cheaper and more interesting to borrow money and purchase a property. Well, then some cons from renting a home again correlate with the things I just mentioned. There's no creation of wealth, there are no tax benefits. And one thing that is also important to keep in mind is that the rents will most likely keep on rising, meaning that it will become more and more expensive to rent a property. Plus, you're paying off the mortgage of your landlord. So with this going up, landlord is only going to make more money. So if you're going to stay here for the long run, smart to actually purchase a property. Robin, can you explain to us the difference between renting versus buying from a financial perspective?
I'd be happy to, for sure. Thanks for the clear explanation so far. When you look at it more from a financial standpoint as well, and more like the specific numbers, then this is a kind of a breakdown of what it would look like. When you compare renting versus buying, a common thing to do and a logical thing to do as well will be to compare the monthly payments, right? So what do you actually spend on it? Now, like Ludo already mentioned before, is when you buy a house, there's a certain investment that you have to do. So money that you have to pay. So purchase and financing costs, as you can see in the overview here, a bit under 19,000 euros when you buy a house of about 525. This is the example. We made an example of two similar properties, purchase price 525, and the rent was, if I'm on top of my head, around 2,500 euros. So if you compare the two, then basically your mortgage cost would be around 2,300 euros. So then you see, okay, sure, my mortgage costs are a bit under my rental payments, so that's all good. But it's even more than that, because the actual money that you lose, in air quotes, when buying a house is in your monthly payments, is your rent, is the interest that you pay. So the interest that you pay is money down the drain, right? Because you don't get anything back. The repayment that you do on the mortgage, that's basically repaying your debt. So when you sell the house, you get more back. So it's kind of saving in your monthly mortgage payment. So very nice. So you get something back. So when you look at 1,600 euros, 1,650 euros is the actual interest rate, so many that you don't get back. So actually, you can compare interest versus rent payment, and that is the comparison that you can make to consider the two options. Now you see the purchase and financing costs, so that investment. So then the most important thing is how long does it take before you earn back that investment? Now, Ludo already mentioned something about that as well. From one, it starts making sense to buy a house. Now, the break-even point is around 22 to 24 months. So basically, then you earn back that investment that you did when you buy a house, rather than that you keep renting and pay off somebody else's mortgage, basically. So then that's 24 months. Now, does it then automatically make sense that you should buy a house after, when you consider staying in the house for 24 months? I'd say more along the lines to 2 years, sure, but 3 to 5 years is a more logical term to stay in the same property. When you look at 5 years, so what would the difference look like then? So when you buy a house, then you have monthly payments, and you have 141,780 euros you have paid on mortgage payments in 5 years. That seems like a lot, and sure, it is if you find it on the street. Well, you have to bring it to the police, but you'd be very happy if you just get it, right? But so it is a lot of money. But what is good to keep in mind, you also build up equity, and that's what I mentioned before. In your monthly payments, you also repay on the mortgage. That means that your debt gets lower, but the value of the property stays the same or increases maybe a bit. The difference between the value and your mortgage, that is called equity. So that's the money that you have in bricks, basically. So if you would sell the house, then you would get that money back, right? So after 5 years, the equity, with not considering the slight increase of your property value, is about 50,000 euros. So that's the profit that you would make in 5 years. Now, when you rent a property, then you spend about 180,000. Regard, it makes more sense to buy a property. We consider staying in the property for, let's say, 2 to 5 years, and to rent. Now, is this automatically copy-pastable on everybody? No, of course not. It's very important that's your personal situation, how you are within your savings, or what your plans are in the future, what you just feel comfortable with. That's the most important thing. Now, if you consider moving or buying a new home And by all means, check in with the guys from Expat Housing Network, so with Ludo or Giovanna, and you're always free to check in with us as well to just basically get an understanding of your situation and to make a valid choice. So that's basically the financial side of renting versus buying.
Perfect. Thanks very much. Cool. All right. Well, let's talk about some market drivers. And why are we going to talk about that? Is because the last couple of years, the prices have increased quite significantly. Of course, the last couple of months, the market has been a little bit different, so we'll touch base on that as well. But first, let's see why the prices have increased over the last years. Well, few reasons. First of all, some fiscal benefits. What I told you already, the tax transfer tax exemption, the interest rebate, or being able to get back part of the interest paid when doing your annual income taxes. I saw a question coming in if it's possible to also do this on a monthly basis. Yes, that is possible. You'll have to apply for it, but that you get back or pay less interest over the mortgage every month. That is possible. And there are no capital gains in the Netherlands. So if you sell your property with a nice profit, then that money is going directly into your pocket or into a new purchase or anything like that. But you don't have to pay any taxes on that. There is currently still a tax-free parent donation. Well, in the Netherlands, it's called a tax-free parent donation. It's actually a donation made by any family member. Now, this is only the case if your parents are also residents in the Netherlands. In 2022, this donation was allowed to be up to 100,000 euros. It's now roughly 30,000 euros in 2023. In 2024, this will be gone, and therefore the transfer tax exemption, or the tax-free parent donation is going away. Now, keep in mind, this is only if your family members are Dutch residents. If you have family members outside of the Netherlands that are willing to help you out with the purchase of a property, they are more than welcome to do so. There's no cap on the amount, and there's no taxes that are going to be paid over that as well. So very interesting if you have some wealthy family members willing to help out. The interest rates were very, very low. At one point, we had like 1.4, 1.5 as a interest rate, which is a significantly low amount. So prices have, or the interest rates have been going up slightly, but because of this low interest rates, we saw that so many people want to buy a property, and therefore, there was a lot more demand in comparison to the amount of properties available. The rents have been very, very high, as I mentioned before, and with this rising, the amount of people moving towards purchase properties have increased as well, which then end up in a situation where there's just a lack of supply. Again, more people looking for a property compared to the amount of properties available. That's the old age economics example, where the prices will increase if more people want something that is scarce. So lack of supply, big part. The current market, it's a little bit different, luckily as well. Things have been balancing out a little bit. We see that the interest rates have increased, and therefore, people have been, especially Dutch people, actually have been a little bit more careful and taken a step back and waiting on what's going to happen. Keep in mind, though, that the interest rates are still historically low. If you look back at the early 2000s, where interest rates were in the double digits, we're still at a very low amount. Also comparing to countries around the Netherlands, even in Europe, and especially outside of Europe, interest rate for the Netherlands is a low amount. There are currently 80% more active listings. So because there are more people trying to sell their property compared to actually the amount of people that are now looking for a property, we see that compared to last year, there are 80% more active listings. Therefore, it's a lot easier to get a viewing. It's also possible to actually negotiate about the purchase price instead of having a deadline situation where you only have one shot to make an offer, and that's that. So that's definitely attractive for a potential buyer. There's less overbidding as well. It depends a little bit on where you're looking. In the big cities, there's still some overbidding going on, but in the more rural parts of the Netherlands, there's definitely even underbidding going on, which is quite cool to see. Now there is unfortunately still a lack of supply. Again, especially in the bigger cities, where we see that also a lot of companies are moving to the Netherlands. To keep their headquarters there, which is bringing a lot of international talent with it as well. And there is just a limited amount of square meters here in the Netherlands. So we see that there's still a lack of supply. Now, this also has to do with the high material costs currently, especially also as like a after effect of COVID with the whole transportation lines that were messed up. We see that it's difficult to get good material and therefore expensive as well. All right. I see it's taken a while for the screen to load. Oh, there we go. Yeah, so what you would need in savings before you start. So there are a few costs that you have to keep in mind once you are ready to actually purchase a property. A few costs that we are calling the closing costs or the down payment that I talked about before. So first of all, we have the transfer tax. Well, typically this will be 2% of the purchase price. You are exempt from paying it if you're under 35, buying under 440,000 euros, and you're using the exemption for the first time. If you're buying a new build property, if you are going to be the first owner, then you're also not paying transfer tax. Now, you'll need to go to a notary. A notary will draft up the mortgage deed and the transfer deed. Both are between 700 to 1,300 euros. If you're buying in Amsterdam, then you'll also need to go to the notary for the purchase agreement. This is an additional, let's say, 500 euros on top. Well, a bank or a mortgage advisor will charge you consultancy costs as well, between 1,500 to 3,400 euros. We from Expat Housing Network will either charge you 0.75% or 1% of the appraisal value, depending on the package that you choose. We'll touch base on this a little bit later as well. The appraiser, someone that's going to come into the property and actually put the official value on the property. So draft up a whole report, share that report with the bank, and that's the maximum amount you'll be able to get from a mortgage perspective. Technical inspector, not something that is obligated, but especially if you're buying an older property, something we do advise you to do, around 465 euros. If you don't master the Dutch language, then you will have to have an interpreter present when signing the mortgage deed and the transfer deed. I always advise you to go with English, as typically that's the cheapest language. If you have or speak a language that is not spoken very often, then the interpreter might charge you a bit more for it. So if you are sufficient in English, then feel free to just choose that. Well, if you need to get a bank guarantee, and I'll explain later why you would need to have a bank guarantee, but if you choose to go for a bank guarantee instead of making a deposit, then the bank will either charge you 250 euros or 1% of the guaranteed amount. Now, the NHG that Robin was talking about, the National Mortgage Guarantee, if you want to make use of that extra insurance and the lower interest rate, you'll have to pay a one-time fee of 0.6% of the mortgage amount to enter into these favorable conditions. Now, we have a third column with the question if it's tax deductible or not. And what we see is everything that has to do with mortgage or with money is actually tax deductible. So the mortgage deed, the consultancy fee of the bank or the mortgage broker, the appraiser, and the NHG fee as well. If you are buying a property that is in a very bad condition, the bank might instruct you to get a technical inspection. If the bank does so, then the technical inspection is also tax deductible. All right, cool. So some tips to win in the current market, as it is quite a competitive market still. It's nice to get some tips. First one, very, very important, and that's the value. The value of the property is super important because the bank will give you up to 100% of the value of the property. Well, let's work from an example. I always like to do that. We have a property here with the asking price of 395. It's listed by Hopma Makelaardij. They did some research and they decided that they're going to ask 395,000 euros for this property. Now, keep in mind, the 395K does not correlate with the market value. Obviously, they've done some research, but it might be that the value is, well, 350, but the sellers want to make some extra money on it, and therefore listing the 395. Yeah, the bank will only give you up to 350. So that's why it's important to actually do the research. Well, let's say we do the research. We see that, again, the asking price is 395. But after doing the research, the market value is actually 415,000 euros. Now, we are not the only ones going to make an offer on the property, not the only ones interested. So to actually purchase the property, the purchase price will have to be 435,000 euros. Now, as I mentioned, the bank will only give us up to 415,000 euros. So it's a little bit higher than the asking price, but it doesn't cover the full purchase price. What it seems like now is that yeah, the overbid was 10%, but actually because the market value is 415 and the selling agent should have just listed it at 415 to be as transparent as possible, the overbid was actually only in brackets, of course, 4.8%. So that's why, yeah, I only want to look at market value because the asking price doesn't really say anything about the value of the property. So once we know the market value, I disregard the asking price fully and also only look between market value and purchase price when it comes to overbidding. Now, in a different example, let's say a different agency listed the property. They didn't list it at 395, but at 375. Then it might be, or then it's still the case that market value is 415, purchase price still 435. Then it looks like the overbidding is almost 20% or 16% here, but the overbidding is actually still 4.8%. So this is again to show you that the asking price doesn't say too much. We really only want to focus on the market value. Now, how do we find out the market value? Obviously, working with a buying agent helps a lot because well, buying agents or we from EHN, of course, we have a lot of systems in place to make sure we know accurately what the market value is. What we do is we use the same method as an appraiser. We compare the property that we want to buy and all the variables of that property with other properties that are comparable. So in a sense that if we're looking at a property of 100 square meters, then we're going to find properties in that same area also with 100 square meters, well, with the same amount of bedroom, same amount of outside space, same ground lease situation, same energy label, etc., etc. Then we find the purchase price per square meter of the property that are comparable, and we multiply it with the amount of square meters that we're looking to buy. Yeah, and then we come up with a market value. We might need to correct a little bit due to, well, inflation, market indexations, or just because the property is not fully comparable, then we have to add or decrease a little bit in that sense. Well, looking at the current market, we also see some different situations. Same property, let's say it was listed at 450. Well, then the asking price is 450, but after doing the research, it seems that the value is actually 425. So the other way around, value being lower than the asking price. In this case, the bank will also only give us up to 425. So if we want to match the asking price of 450, yeah, then we have to, it seems like we're not overbidding, but we actually have to overbid 5.5% or 25,000 euros to meet the purchase price. Other example, asking price 450, market value 425. Now, this is the best scenario. We also purchase the property at 425. Now, it might seem that we were able to underbid 5.5%, but in my opinion, and in the opinion of a buying agent, we didn't overbid, we didn't underbid, but the bidding was at 0%, so to say. This is the most ideal situation, of course. All right, well, what does a winning offer look like? Offering a good price is very important. Now, what do I mean with a good price? And not always the highest price. Why? If we go back to the previous example, let's say we have this, the asking price 375, market value 415. Now, if we offer 500, we're more than welcome to offer 500, of course. But if we say to the sellers, our offer is also subject to us receiving a mortgage of 500, yeah, the bank will never give us 500 because the market value is 415. So the selling agent or the sellers will never accept an offer of 500, even though we might have the highest offer. It isn't necessarily a good price. If we can say to the sellers, look, we offer 435 but we only need a mortgage of 415. That's where we say, okay, we are offering a good price, but, and that correlates with the second part as well, we are offering security to the seller. So we can say, A, we did our homework, so we know what the market value is. B, we're not fully relying on a mortgage because we're willing to add some own funds as well. So both of these will increase the likability of our offer. Now, third one, offering the least amount of hassle. This typically has to do with adding specific subject twos in the offer. So subject to a technical inspection, subject to an asbestos scam, subject to going to the property with your parents to give another blessing, etc., etc. These are all things that can obstruct the process and just delay the process as well. And the sellers, obviously, once they're actually ready to sell their property, to want to keep things moving and sell as quick as possible. So offering the least amount of hassle is a big one there. However, keep in mind, you want to keep protecting yourself. So especially if you're buying a very old property, keep in that technical inspection. Selling agents will 9 out of 10 times understand if you want to do that. Now, last one, something that gained popularity in the last couple of years is offering a personal touch to the offer, where you send a little biography about yourself, who you are, what your hobbies are, what kind of work you do, but also what you're intending to do with the property. So if you're intending to start a family or live there for a very long time, and or if you want to renovate, things like that, all has impact, because sometimes you really have sellers who are super close with their neighbors and they want to make sure that the next owner is going to take care of the property and of the neighborhood as much as they did themselves. Then the last one, that is doing your due diligence. That's a big one. Well, we have the technical inspector that I talked about and the appraiser. Question to you guys, and feel free to pop it in the chat. Do you think you book them before or after your offer is accepted? I'll give you a few seconds to fill this in. Just pop it in the chat. I'm also curious to see where you think these peoples are booked. Now I see someone is saying after, sadly. Monisha is saying before. A lot of befores coming in as well. So the majority is saying before. Well, the first answer that we got was actually correct, and that is right after the offer is accepted. Sweet spot is right over here, right after the offer is accepted. Now, why is that? As you guys saw in some previous slides, is that unfortunately the technical inspector and the appraiser don't work for free. So the technical inspector being 465 and the appraiser being, well, between 700 and 900 euros. It's nice to make sure that if they come in, that they're coming in for a reason. Let's say you have the appraiser come in before you make an offer, or before your offer is accepted. They charge you 900 euros and then the offer is not accepted. You still need to pay the 900 euros. So of course you will have your buying agent to do a lot of due diligence beforehand, to check the documents, make sure the state of the property is okay, to check the market value, to make sure that it's in line with your budget, and that the asking price is also in line with our expectations. Well, once we make the offer, then we have around 1.5 weeks to actually do our due diligence, to make sure that the inspector and the technical inspector and the appraiser come in. So let's say they come in a few days after the offer is accepted, and then we receive the report right here before we sign the purchase agreement. Now, in the Netherlands, up until the moment that you sign the purchase agreement, you are not legally tied to move forward with the purchase. Meaning that if we get the technical inspection report here and it says that the whole roof is rotting and the foundation is super crooked, and well, you need another 100,000 to fix your property, you can still pull out of your purchase without any financial consequences. Same goes for if we think the value is 500, but the value is actually 400. That could bring some problems with it as well. Then we can still pull out without any financial consequences. Now, a small disclaimer. Our price research is 9.9% or 9.9 out of 10, pretty much always the same as the value that the appraiser is going to give you. So it definitely helps to have a buying agent to make sure you know what the market value is beforehand. Now, we also have a 3-day cooling off period or a reflection period in the Netherlands. This is only applicable for the buyers, and this is to protect the buyer, because market can be, or the whole buying process can be fast paced. So to make sure that after you sign the purchase agreement, you can still reflect on what you've just done, and you get another 3 days to, again, dissolve the purchase without any consequences. Now, after those 3 days, you're tied to the purchase and tied to the obligations that are written down in the purchase agreement. To give a little more extensive timeline, how the process is going to look like. On the left, obviously, we have to start somewhere, and we will start with a search, finding the right property. This is something that you can do on Funda. You have Paradius, you have Jaap.nl as well, but on Funda, the majority of the properties will be online. So you can definitely use that as a reliable source. Now, you will, from there on, if you find a property, you'll book a viewing, you'll go to the property, make sure that the property is up to your expectations and that the pictures are not deceiving, but actually just as good as the properties in real life. Let's say you still like the property. This is also the time where you do your research, property document review, the price research. Let's say everything is still up to expectations and in line with what you were hoping to receive, then we can move forward with making an offer. We'll be in contact with the selling agent, gauge the interest a little bit, with a bit of luck, see what kind of offers he or she has in, and then we'll submit the offer as well. Now, it's a few hours of sitting like this, hoping to get some good news. If we do get good news, fantastic for you. Obviously, a moment to open your bottle of champagne and throw a little party. And from our side, it's important to start booking the third parties. Now, this is what we just talked about, the appraiser and the technical inspector. Have them come in here. If we're buying in Amsterdam, then we also have to have the notary come in quite quickly. So we'll book the notary here as well. Then, if all the reports are fine and giving us green light, then we'll sign the purchase agreement. Again, the contract where you say I'm going to buy and the seller says I'm going to sell. Now, there are a bunch of other obligations in that contract as well. Once you sign that, you can apply together with Mr. Mortgage for your mortgage application. This typically takes, let's say 3 to 4 weeks, but I know Robin can do it a lot quicker. If the banks are up to speed as well, then 1 or 2 weeks should be sufficient. But for the sake of the example, we wrote down 4 weeks. Let's say after 4 weeks, your mortgage application is approved. Then not a lot can go wrong anymore. You have your property secured, you have your financing secured. From there on, it's just waiting until the transfer date. Now, this transfer date is agreed upon in the purchase agreement, can sometimes be very quickly after the mortgage application is approved, but sometimes if the seller still need to move out or find a new property, then it can take a little bit longer. Around 1 to 2 weeks before the transfer date, we get the statement of completion. It's a fancy word for final invoice. On this invoice, we have the purchase price, the transfer tax, the municipal taxes, the land registry costs. My costs will be on there. Mr. Mortgage costs will be on there. So you'll pay everything together to the notary, and then the notary will pay out everyone accordingly. So that makes your life a little bit easier. Then on the transfer date, we will have a final inspection first. So we'll go to the property, make sure that all the walls are still standing, but also is clean. There's no trash on the floor, and all the movables, all the furniture that has not been agreed upon is out of the property as well. Then we'll go to the notary. We'll sign the transfer deed where you actually get ownership. So ownership is transferred from seller to buyer. And you'll sign the mortgage deed where you're officially in debt with the bank. You now have an obligation to pay off your mortgage. This is also the moment that you get the keys. And from there on, responsibility and the enjoyment of having the property is now for you. And you can also move into the property. You'll have roughly 2 months as a liability term. I always advise my clients to not take that full 2 months, but use the property extensively for the first 2 weeks. Make sure that all the radiators work, all the windows open accordingly, everything works like it should. Because in those 2 months, we can still go back to the seller and have them fix it or have them take the costs for things that should have been working, which don't work. That is the timeline in a nutshell. Typically takes between it's a big timeline, but typically between 3 to 8 months, with a lot of variables, as you can see. If we have a viewing today, make an offer tomorrow, and then sign the purchase agreement next week, get the financing in order in 2 weeks, and then go to the notary to sign the transfer deeds, we only need 1 or 2 months. But if we buy a property, or if we start the process now and takes 2 months before we actually make an offer, then another month before we make a competitive offer. And then the sellers also need 8 months to get the keys of their new home. Things can take a lot longer, but I would say typically 3 to 8 months to starting the process to actually getting the keys of the property. All right, then we have some FAQs, some questions that we get asked frequently. So we thought we'll bundle them to go over them. And if there are any questions left afterwards, we'll answer them live. First question for you, Robin. Is it possible to get a mortgage with a temporary contract or even as a freelancer?
Yes, easy answer. But let me elaborate a bit. Both is possible. Let's focus on the temporary contract first. So when you just started working somewhere, it's very common that you have temporary contracts for, let's say, a year. Now, when it comes strictly to the mortgage options, you can already secure a mortgage. When you apply for a mortgage, you need a so-called employer statement. That's a confirmation from your employer, what your income is, what your contract situation is, all of that. There's a box they can check there as well. And this box basically states it's an employment continuation statement and also known as the declaration of intent. And basically the employer says we intend to keep you on. If your performance is the same and if our financial situation is the same, then they intend to keep you on. Now, I cannot emphasize this intention too much because basically it means it's not legally binding. So even if you have this contract, this statement signed, and the employer does let you go, there's nothing you can do with this statement. So why does it actually make sense? Banks, they like this because banks like a continuous income, a steady flow of income and predictability, basically. So when they know, okay, sure, it's expected that you will have a longer term employment there, then that's perfectly fine. So that's when you can already use the temporary contract. Again, as mentioned, this statement is not legally binding, so therefore the majority of the employers know that they can just sign this to help you out to find a house. Now, that's from the standpoint of getting a mortgage done, but we also look at your financial situation and also your employment situation. So when you say, well, sure, I have a temporary contract, but I might get this statement, but I'm not entirely sure if I want to stay here or if I'll actually continue here, then we can also consider, well, hey, does it make sense to buy a house now? So there's different consideration. But strictly speaking, temporary contract, no problem to secure a mortgage. Now, being a freelancer, by the way, freelancer, business owner, entrepreneur, that's all considered the same thing. Basically, you're self-employed, you have your own company, and you're registered at the Dutch Chamber of Commerce. And that's the first thing. Sure, you can secure a mortgage being a freelancer, but you have to be registered at the Dutch Chamber of Commerce. This is what this automatically means as well. When you have employment outside of the Netherlands, so from abroad, no problem. You can definitely do that, no issue. As long as we can substantiate that you can do your job here in the Netherlands for a company abroad. This does not apply when you're a freelancer or a company owner. Ownership from abroad will not be considered. You have to have 12 months of history of your company registration here in the Netherlands. From that moment on, we can already use your income to secure a mortgage. When you look up online how this really works, usually you see 3 years. That's not entirely correct, or entirely not correct, to be more specific. 1 year, 12 months is sufficient. When you move your company from abroad to the Netherlands, then after 12 months, we can also consider your history of your company from abroad as well, if you can continue it here as well. So that's the long answer. Short answer, yes, you can. Temporary contract, best to have the intention, declaration of intent. A freelancer, at least 12 months, and then you're good to secure a mortgage.
Perfect. Thank you.
All right.
Yeah, a lot more is possible than what is sometimes thought.
Yeah, for sure.
All right. Well, a question I think that is very relevant to the majority of you here, as the majority will be expats. What happens if you want to leave the country after several years? Few things can happen. Pretty simple, actually. So first of all, you can keep your home, but you also keep your mortgage costs. You will have to keep paying for your property taxes and such, but you can use it as a vacation home and come here every once in a while to visit the beautiful plains of the Netherlands. Then the second option is renting out your home. Keep in mind you will need permission from your bank, but if everyone gives permission and yeah, the municipality is also okay with it, then you can rent out your home and start using it as an investment property. And then the third one, pretty easy. You can also sell your property. There aren't any penalties or capital gain taxes. So if you want to sell your property, potentially you can make some profit on it and use that money for your next adventure. Totally fine. No penalties or anything like that. Easy answer. Then that correlates also with well, this question: is it possible to rent out a house or part of your house? Well, from a buying agent perspective, then yes, it is possible. Few things. First of all, you need permission from the bank to do so, as you are initially going to apply for a residential mortgage. If you want to then use the property not as your own residence, but you want to rent it out, then you'll have to change your mortgage type to a buy-to-let mortgage. Now, the mortgage type is a little bit different. Interest rates are different. The loan to value is also different. So things to keep in mind. And the bank will need to give you permission for that. Now, keep in mind, there are also some rules from the municipality of Amsterdam, but also other municipalities, which states that you have to use the property for your own long-term main residence for the first 4 years. Well, in Amsterdam, it's 4 years. Other municipalities a little bit different, but at least for the first X amount of years, you have to use the property yourself before you can use it as an investment. This threshold is up to a certain WOZ value. In Amsterdam, that's 512. Again, other municipalities might differ. So if you're buying a property of 400,000, even if the bank gives you permission and you have a nice buy-to-let mortgage, etc., in Amsterdam, you're not allowed to rent it out immediately just because you have the self-habitation obligation. Now, renting out a room is a little bit different. Banks are a little bit more flexible with it. And technically speaking, they would like to know, and they will definitely want you to have a good agreement with your tenant, specifically having the eviction clause in the agreement to make sure that if you are planning to sell your property, that the tenant can't say, look, I'm not going anywhere. You have to sell the property with me in it. Obviously, the value of the property is a lot less at that moment. So eviction clause is one to really keep it in the contract. That is because tenants in the Netherlands, after living in a property for a year, they get very, very strict tenant rules, or for the tenant, it's very nice, but for the landlords, it's very strict rules. And it's almost impossible to kick out a tenant, even if they haven't paid for, let's say, a year. To really put someone on the street is very, very difficult. You have to go to court, etc. So having that eviction clause is important. But keeping all of that in mind, it is possible to either rent out your whole house or to rent out a room. Anything to add on that, Robin?
Yeah, that's basically it. True. And indeed, when it comes to renting out your house, this eviction clause is very important. Now, what is good to keep in mind is those plans are not specific yet, and there's a lot of information out there, but all this information isn't necessarily already confirmed. There's a lot of political plans, but nothing is set in stone yet. So be well informed before you do something, that you know what your situation is. There are definitely possibilities. Renting out your a room in your house, indeed, doesn't really matter. The bank, as you already mentioned, without somebody in it, otherwise you have an issue with the value. You don't necessarily have to inform the bank about this. Just make sure that it's well taken care of. Most important thing is that the value isn't impacted by what you do. Now, when you rent out your entire house, that is a different story altogether. When you are not living in the house, period, then you have to do something with your residential mortgage. It has to be changed into an investment mortgage, for instance. And that's where the value of your investment property is usually lower. And also with a regular mortgage or residential mortgage, you can finance up to 100% of the value, which is very nice. So you don't necessarily have to down pay on the purchase price or the value of the property. With an investment mortgage, you always have to, or depending on what the situation is, of course. But basically, it is more complicated, but to simplify it a bit, an investment mortgage is up to 60 or 70% of the actual value. So usually you have to bring some cash to and to make sure that the municipality allows you to rent out the property, and the homeowners association, if you buy an apartment, that your neighbors also are okay with you renting out the property, but that's usually in the rules and regulations of the homeowners association. Again, that's a detail for later on. So you can just make sure that you know what you're doing.
Perfect. Yeah, that's good advice in general, I think. All right, then what is the 10% deposit I need to complete?
Yeah.
Well, this is a question we received as well in the Q&A. So there's a difference between down payment and deposit. In the Netherlands, you don't necessarily have to make a down payment to be able to get a mortgage. You can get 100% of the purchase price as a mortgage if the market value is the same as well. Now, the deposit, that is something that you pay towards the notary and indirectly towards the sellers to show that you will fulfill all your obligations once you've signed the purchase agreement. So this deposit is also made only from the moment that you've signed the purchase agreement and that you have your mortgage approved already. So this is something you do typically 1 week or 2 weeks after the mortgage is approved. Yeah, it's to show that you are going to fulfill the rest of your obligations as well. In the past, it happened that, well, this rule wasn't necessarily applicable already, and people would sign the purchase agreement and then at one point just leave the country, go to Panama and not never show their face anymore. Yeah, then the sellers are left with a property in a different kind of market, have to list the property, etc., etc. Whereas the buyer, not a lot of consequences. So they put the 10% deposit in place to make sure that if anyone is in breach of contract or is not fulfilling their obligations anymore, that there's a 10% incentive really to make sure that you do fulfill those obligations. So that's a 10% deposit. You can either make this deposit from own savings, and then it's something you will obviously get back at the end of the process, or, and that's where the bank guarantee comes in, if you don't have just 10% of the purchase price laying around, which totally makes sense, you can ask the bank to make this deposit on your behalf, which is called a bank guarantee. Now, again, they don't do this for free. Banks will never do anything for free. It's either 250 euros or 1% of the purchase price. Yeah, so timeline where this deposit comes in. So if we have the timeline here, the mortgage application is approved over here, then around here, the deposit needs to be paid. All right, then our fees, not something we should skip. So we have the, I'll start from EHN's perspective. We typically have 2 packages. We now also have a 3rd package, the new build package, but we'll first focus on the smart and the complete. Well, smart package for the independent buyer. What we mean with that, potentially someone that has already bought a property before or know what it's like to buy a property or an apartment right, or just someone that really wants to have their own hands-on in the process, loves doing a lot of research themselves and well, has the time to do so. In this case, you'll still, of course, have an intake with us. You'll have access to a personal buying manager, and that buying manager will do a property review. So we'll do a property document review and a price research, so you know what the value is like. We'll submit the offer on your behalf, so we'll be in contact with the selling agent, make sure that all those conversations are led by us. Now, if we get the offer accepted, we'll book the 3rd parties for you, the appraiser and the technical inspector, and we'll also do all the communications with them, and we'll review all the contracts that come out of it. Same goes for the contract review of the purchase agreement, so that you are aware, you know, what you're getting yourself into, but also making sure that everything is legal and up to expectations. From the moment that you sign the purchase agreement up until the moment that you have the transfer, we'll be there for the full transfer support. So we'll also, again, make sure that everything is going smoothly with the selling agent. I'll also be in contact with Robin during this time to make sure that I can keep the selling agent aware of where we are in the mortgage application process, and maybe Robin needs some extra information from us, well, then he'll directly contact me. So we'll have direct lines there. And of course, at the moment that we sign the transfer deed and the mortgage deed, I'll again go through all these documents with you so you are aware of what is happening there. This price or this package is 0.75% of the appraisal value. It's including VAT. And we ask a deposit payment of 499. Now, we also have the complete package. This is for someone that, well, simply said, doesn't have enough time to dive into the process themselves, or is not very aware of the Dutch housing market or the process of purchasing a property, then it might be nice to have some more hands-on consultancy. Here, of course, you'll still have an intake, access to a personal buying manager. We will also schedule the viewings for you. So we'll be in contact with the selling agent to get a good time slot and book that viewing. We'll attend the viewing as well. Very big one in my opinion. Here we'll obviously answer all the questions that you have during the viewing, but I think more importantly, ask the right questions to the selling agent. Already initially make sure that the homeowners association is okay, that there's enough money in savings, and make sure that everything is healthy. But I will also be there to differentiate a cosmetic crack in the wall from a structural crack, that kind of stuff that can be very important. And of course, I'll build up a connection with the agent to make sure that once we want to make an offer, we'll get as much information from that agent as possible. Now, again, we'll do price research, property document review, we'll submit the offer for you, we'll book the third parties, go through all the contracts and reports. And then from the moment that we have the transfer support, well, it's full transfer support, meaning that we also join you to the final inspection, we'll join you to the notary, but I'll also stick around during the liability turn to make sure that if there are any things that need to be amended, fixed, maintained, whatsoever, that you can contact me and I will contact the sellers or the selling agent, and that you don't have to fight it out with the sellers yourself. Now, this package is 1% of the appraisal value, again, including VAT and the deposit payment of 499. It's a deposit, so you'll get it back at the end of the process, of course. And that is how it works. Now, we also have a new build package. Obviously, this process is a little bit different because, well, you can't go to a viewing as the property doesn't exist yet. So here we'll also do some search and registration. We'll attend the meetings with a developer or with the selling agent. We'll review all the documents. We'll follow all the checklists and points of attention that are set up by the developer. We'll do a price benchmark, make sure that the property is listed at a certain price which correlate with prices for properties in that area. If possible, we'll negotiate about the price, and then we'll do the contract review, have again the pre-transfer support and assisting booking the experts. This is a flat rate of 3,450, also including VAT, also a deposit payment of 499. Easy does it. That is it. Robin.
Yes. Yeah, we do also charge something. I'm sorry. We have a couple of there's different options. Basically, this is the baseline. When you buy a property, it's your first time home that you buy, for instance, then we have a fixed fee of 2,999. When it's a buy to let, so for investment purposes, is 31.99. Increase of your mortgage or adjustment of your mortgage, then it's 26.99. So when you already have something but you want to adjust it, bear in mind, then it's basically also a new mortgage application. And then when it comes to buying a home for over 1 million, then we charge this a bit of a higher rate. Now, basically, it doesn't really matter for us what the value of a property is that you buy. For us, it doesn't really matter, but for the banks, it does matter. If you go over 1 million, they will be a bit shivery and they will be doing more extensive checks. So it takes more time. We'll cover that all, of course. And that's the fee of when buying a home for over 1 million. Now, what it all includes, there's a common factor all around. So we guide you throughout the whole process, regardless of what your choice is going to be. We always start with an introduction call. That's always free of charge. So that's where we'll start. First, get to know each other a bit better, to get an understanding of what your situation is. We do a quick eligibility check and a quick scan of your income to see, well, hey, the goal that you have, is it manageable? Is it achievable? Because otherwise it doesn't really make sense to move forward, right? So first we'll do a basic check, an introductory call to do a quick scan of your options. Then the next step is the financial analysis, and that's to really deep dive into your financial situation. And that's where we really look into, okay, what is your current financial situation? What is your goal? What is it manageable? We'll look at different scenarios. We don't always go for the most obvious one. We always go for the best one possible. And this is kind of where my blood starts pumping, and I can nerd out completely on your mortgage to find out, well, hey, what is the tweaks? What is the best combination of your preferences, monthly payments, lowest interest rate possible, best conditions for the bank, for you, best conditions, bank conditions for you, not conditions for the bank. So that's all something that we'll check in the financial analysis. This is basically the same thing, or even more extensive than a bank would do when you actually apply for a mortgage. Because the tricky thing is, in the Netherlands, you don't have a pre-approval like you do have in the US, for instance, and in the UK, I think as well, that you can go to the bank and say, well, here are my documents, can I secure a mortgage? And they already confirm this. It's not something that Dutch banks do. We come as close to that as possible. So we do a check, basically the same assessment as a bank does. Why we do this so extensively is because we want to know that when you go for a viewing of a house, you only have to focus on the house itself. So you can look at the high ceilings or the nice windows that you have, or a brand new kitchen, or more of a bit more work that you want to do in the house. And you don't have to worry about the finances, because basically when you plan to a viewing, and definitely an offer, obviously, but even a viewing, if you already plan that and you say, well, hey, sure, I'm curious what my mortgage would look like, there's no limit of amount of calculations or calls that we do. That's all within our fee and our service. So we just want to make sure that when you do a viewing, you know that your mortgage gets approved. So we'll start the financial analysis. Then we'll have a call of about an hour to discuss everything in your specific situation, discuss different scenarios. And from that moment on, every time that you find a property, you can send it to me. I'll recalculate everything to make sure that you know what's what and what your where you are in your finances. So that's what we do. Again, no maximum time frame or amount of calculations or something. That's all included in our service. And when your offer got approved, when Ludo did his magic and your offer got approved by the seller, happy days. And then we'll start the mortgage application when we have the documents ready. Now, as Ludo already mentioned, we don't need the 4 to 6 weeks. I'm not entirely sure what banks nowadays do in the meantime. We need about a week or two usually. Of course, sometimes you go for a bank that has longer duration, but on average, a week ago, I secured a mortgage, and I think 3 days. So it can be very fast if needed. So that's, but then we also, I have no issue taking a week more to secure a mortgage if we have to wait a bit longer for this bank that is just very busy and takes a bit longer, but you have better conditions, right? So all of this is something that we'll look into. Now, we do charge a small down payment to get things started, to cover the hours that we started, that we put in at the start. That down payment is 299 euros, one-off thing. So regardless of how long it takes, the remaining fee is only charged at the very end. So for instance, you buy a residential property, 299 at the start, and only at the very end, 2,700 euros is due only when you actually buy a house and actually have the keys in your hand. Now, the VAT is not charged to us, so we don't charge it to you, obviously. And just to annoy Ludo a bit, our fee is tax deductible, so you get back about 37% after you bought the house. But fair enough, I will keep my fingers crossed for the government to reconsider and do understand that that it's very wise to use a buyer's agent as well. That being said, that's how we work. And by all means, check in if you have more questions about it.
Cool. All right, then the Q&A. So we have a few questions left. All right, Robin, question for you. If I have a mortgage for 10 years, for example, and at year 7, I already have 7 saving for payment for the rest of my mortgage, can I pay off the remaining years of my mortgage?
Very good question. Yes, you can. But would be nice if questions always wouldn't have this, but there is a but here. It kind of depends on what bank you go with. So different banks have different conditions, as mentioned before. And the baseline is that you can always make additional repayments up to 10. And so what I mean by additional repayments, so in your monthly payments, you already repay on the mortgage, right? Now, on top of there, you can make additional repayments per year, January till December, of 10% of the original mortgage amount. If you buy a house for 550,000 euros and you have a mortgage for 550,000 euros, gradually repay on the mortgage, but any year you can repay up to 55,000 euros on the mortgage additionally. If you repay more, so if you go for 60,000 euros, what the bank will say is then, okay, sure, you can, there's no problem. But over this 5,000 euros that you repay more, we will check if they lose money over you. When do they lose money over you? Let's say your interest rate was 4%. The interest rate at the bank then is only 3.5%. So then over that 5,000 euros that you repay more, they lose the 0.5% on interest rate, and that's what they'll charge you as a penalty. You get a slight discount on there, so that's a good thing, but that's basically what that is. Now, does that always have to, is that always the case? No. The baseline is 10%, but there are some banks that allow you to repay up to 15 or 20% of the original mortgage amount. And there's even a couple of banks that say, okay, sure, we allow you to repay any amount that you like, so the 100% additional repayment per year. You can do that. So if this is something that you expect will happen, if you expect inheritance in the next couple of years, or if you expect a gift that you will get from somebody, or a major payment increase or a bonus payment, for instance, we can already consider, well, maybe it makes more sense to go with a bank that allows you to get a higher, to repay more than the 10, 15, 20%. The only consideration here is if you want to make this additional repayment, it has to come out of your personal savings. And this addition, why they state that is because these percentages, they do not apply when you change your mortgage from one bank to the other. So a bank is perfectly fine to help you out to make additional repayments as long as you stay with them. That's basically the consideration there. So if it's important to you, we can choose a bank that allows this. The interest rates aren't necessarily impacted too much. It's just an additional benefit that banks have for you.
Perfect. All right. Then a question from Nikolai. If I buy a property together with another person and this other person does not live in the property, but I do, what is then the property transfer tax? Well, it goes the same way. If that person is going to use it as an investment property for his 50 or her 50% share, and you are going to use it as your residence, then that person is paying 10.4% over their share, and you are paying 2% over your share. So it really depends on how you're going to use the property, but that is how you choose it. Then a question.
Sorry. Bear in mind, consider how you want to finance this. Banks don't do hybrid mortgages, but there could be possibilities, but make sure that you, before you sign a purchase agreement, know how you're going to finance it. But that's it. Yeah, go ahead.
Good call. Question for you, Robin. If you have the 30% ruling, do banks only look at your income above that 30% ruling and not the full income, taking into account the 30%?
Very good question. So basically what is good to know, and this kind of answers the question in that sense, the tax authorities, the bank looks at your gross monthly payment. That's the baseline. And then why I mentioned this is that the gross payment, base payment, from that 30% is subtracted and then added net, so as a net payment. But basically, on the base calculation will be done without this 30% addition. So therefore, having the 30% ruling doesn't give you, it does not necessarily have to give you a benefit. It does, but it's in any case, it's not negative. So that's the most important thing. So we'll look at your gross base payment, excluding this 30% ruling. And if you really need it, we can include that additional net income that you have to slightly bump up your mortgage capacity. If we don't need that income, I suggest not to use it, because the thing is that your mortgage duration is usually 30 years, but for the 30% ruling, that has a maximum term of 5 years. So let's say you already used up 1 year, then you only have 4 years. So if you can borrow, let's say 5,000 euros more based on your 30% ruling, you do have to repay it in 4 years. So in comparison, your monthly payment will be quite high there. So therefore, if we don't need it, we won't use it. If you do need it, then we can use it depending on the bank. But they base it, your basic mortgage capacity is based on your gross yearly income, excluding this 30% rule.
Great. Let's see. A question from Afis. If a person is married, is it compulsory to buy the property together with their spouse? My wife lives in a different country, but I've registered my marriage with the gemeente. My wife doesn't have a visa in the Netherlands. As far as I'm aware, if you are going, if the property is, or if you are married in the Netherlands, then she has to indeed become at least 1% owner of the property. But if you're not going to use it as a marital home, that's something that I'll have to double check actually. Well, good question, Afis. I'll come back to you on that one. Do you have any insights, Robin?
Well, you can. The most important thing is that when you're married and your main residence, the consideration is that then when you're married and you have something is considering your main resident for you, then it's considered the marital home, if you will. So then basically what is important to do is that your spouse who lives abroad, they have to agree that you're buying this house. Same goes for the financial side of things. Your spouse has to confirm that he or she is okay with you buying and financing the property. So there are definitely possibilities, but you do need some input from your partner abroad. So that's basically it. Doesn't necessarily have to be an issue, but it's just something that that has to be taken care of correctly. Also, it depends on how you are married. If you're married in marital goods, so everything is everybody's, then that's definitely something to consider. If you have a prenup, so a prenuptial agreement, that's a bit more flexible because then you already have discussed in your marriage saying, well, hey, ownership is split. But there's always something to do. Your partner does have to do something to sign something and confirm something when buying a home. So there are possibilities. Again, make sure that you know what's what. But there are. It's definitely possible.
All right, cool. Thank you. Then, question for you as well, Robin. Is it possible? Is it easy to switch from your residential mortgage to an investment mortgage?
Sure, it can be. It kind of depends on what bank we go with again. There's some banks that make it even easier for the future as well. I wouldn't necessarily focus too much on that because right now the interest rates are higher than they might be a couple of years later. But it doesn't necessarily have to be that complicated. The most important thing is that, for one, the municipality allows it, and then also that the value of your property in rented state is sufficient as well to secure the mortgage. But it doesn't have to be complicated at all. As long as the specifics of your property are good, value in rented state and the expected rental income is sufficient, there's no problem to change your mortgage from a living mortgage to a buy-to-let or investment mortgage. Do consider that you might have to input some savings, but again, it really depends on what your outstanding mortgage is when you do that and what the value is at that time. Okay,
and is there a specific kind of bank you would recommend for a mortgage and why?
Yes, there are. But annoying answer again, it really depends on your situation. So, and also on the property specifically what you're that you're buying, because all banks have their own conditions, and that has something to do with if you buy an apartment, for instance, you'll be part of the homeowners association. That homeowners association has to comply to certain rules and regulations depending on what bank you go with. Also depends, do you want to go with 10 years interest fixed period, for instance? Then right now, Lloyds Bank, for instance, has a quite good interest rate. Now, could well be that next week they increase their interest rate or other banks decrease their interest rate. If you go for a shorter interest fixed period, so let's say for 5 years, for instance, then Opvion is, for instance, a very good choice right now. But that really depends on what your plans are. If you want to have this option to be able to repay more, if you only focus on the interest fixed on the interest rate and therefore the interest fixed period, all that makes a difference. So it's important to check your options out there. And this is also why we actually started this, because I used to work with at ABN AMRO, very good bank, long time ago. And it's a perfectly fine bank, but you can only offer their option, right? So now we have a choice of about 35 banks. So then we can really see at any point in time, what are the best conditions, interest rates, and what fits your situation the best. So there are some banks that are the best right now, but that could well be different next week because the interest rates tend to vary.
Yeah. Okay. And then in regards to interest rate, do these interest rates stay fixed?
Well, depends. The interest. So how it works is you can lock in your interest rate, and then you have an interest fixed period. From the moment that your offer got accepted, that's when we can lock in your interest rate for the application. So that means that for the next 10 years, you'll have the same interest rate, for instance. And then for your applications, that stays the same. But it depends on how long you fix your interest rate for. Or you can choose to fix your interest rate for 5 years or even for a variable rate. So then every month it can change. Depends on what your choices are. But when it comes to the interest rate that you look up online right now, they can vary every week. So every week the bank can say, okay, sure, now we choose the interest to increase the interest rate a bit, or maybe to decrease the interest rate a bit. So banks can vary their interest rate. If you start your mortgage application, then your interest rate is locked for the mortgage application for the term that you decided to.
Okay, cool. Makes sense. So I think you answered the questions regarding variable mortgages as well. And then I have a question. What happens to my mortgage if I resign my job and leave the country and I'm unable to sell the house within the stipulated time? Example for expats, it is allowed to live in the Netherlands only for 2 months without a job.
Yeah. So in any case, so first answer to the first bit. So it maybe answers questions for somebody else as well. If you have a mortgage and you lose your job or you change jobs, the bank doesn't care. You don't have to notify the bank about your new income situation. They only check it once, and then you just have to sort out that your mortgage gets paid. So that's one thing. Now, if you quit your job and you move out of the country, if you don't use the property for your personal residency anymore, you have to change the mortgage in any case, because it's a residential mortgage. So it either has to be an investment or you have to sell the property. Now, and then the stipulated time to sell your house, there's not really a stipulated time to sell your house. It doesn't have, so you don't have to live in the Netherlands to sell your house, basically. And that's the most important thing. So even if you still have a mortgage, then you can let them know. So, hey, yeah, I'm trying to sell my house. And then the bank will understand that you temporarily cannot, do not live in the property anymore, and that's okay. But you cannot say, okay, sure, you bought the house for 500,000 euros and then contact the bank. Yeah, it's really hard to sell my house. And if they then look on Funda with an asking price of 1.5 million, sure, then they'll scratch them behind the ears as well, saying, okay, that doesn't really make sense. But if it's hard to sell your house, there's not necessarily a time for you to sell your house within, because the seller, the bank also wants their money back, so they understand that it takes a bit longer. The only thing is that you will have mortgage payments as long in the time that you're trying to sell the house. So there's the stipulated time that you can stay in the Netherlands for 2 months. Doesn't apply with selling your house when you need to.
Okay, great. And then our final question is, how long on average does it take for homeowners to pay off their mortgage completely in the Netherlands?
Yeah. You have your mortgage duration is the regular time is 30 years. So if you don't make any additional repayments, it takes 30 years to repay your mortgage. So that's the base term. Some people make additional repayments. If you really want to go all out and you want to repay up to 10% per month, per year. Per month is a tricky thing, but per year, then you have monthly payments, repayments on the mortgage, and then you do additional 10%. Then in about 8.5 years you can repay. The regular time of your mortgage is 30 years, so you repay in 30 years. One thing, a common misconception that I hear quite a lot now, is that people think that you can only sell your house after the mortgage has been repaid, or you can only, when you sell the house, that you always have a penalty. None of this is true. If you sell your house, you never pay a penalty. Basically how it works, you get an amount, or you agree to a certain purchase price, let's say 500,000 euros. You have a mortgage for 350, mortgage repaid, no penalty. You get 150,000 euros in profit. You don't pay taxes over that profit, and that's it. Yeah, that's how it works, to just answer a question that wasn't asked, but we get quite a lot.
Perfect. All right. Thanks very much. That was our last question.
Very good. Thanks for the well done.
Yeah. Thanks very much. Well, all our attendees for joining today. I hope it was informative for all of you. If there are any unanswered questions, feel free to schedule a call either via the link that you saw before or via the QR code you see here. We're more than happy to dive into your personal situation as well. Thank you, Robin, for always being here to support us with our financial questions. And that's it.
Yeah. Well, for everybody, thank you, Ludo, again for the clear explanation and hosting this this webinar. And well, enjoy the sunshine and enjoy your lunch. I think it's about that time, right?
Indeed, I agree.
Cheers,
All right,
guys.
guys. Hope to speak to you guys soon. Have a good day. Bye-bye.